From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for October 4th, 2016. Today we're going to be taking a look at the NZDUSD, the New Zealand dollar versus the US dollar for today's trade analysis. But first I want to recap a couple of the trade suggestions made since yesterday. First off, before we do that, taking a look at the news calendar today during the US trading session, we're very light. Really only one piece of news out of New Zealand for the US trading session today. So very light on the news calendar. Jumping into the market here, we can see the USD CAD. We suggested a trade yesterday, a buy at 1.3105. That's the yellow shaded area that you see here on the chart. The market came down, dipped into it, sat on top of the yellow shaded area over the past couple of days. So we took a buy into the 3105 level after seeing the market dip, rally, dip again. So we took the buy there and now into profit, 52 pips of profit here into the orange shaded area. Clearly, we're at resistance right now. If you're into profit, you should be protecting profit. My current stop loss has been moved into profit, so I can't lose on the trade. The worst case scenario, it goes back down to the yellow shaded area now. If you didn't buy there, I think your next opportunity to buy it, if it continues to pressure higher, is the break through 3175, the top side of the orange zone. We need to get back above there before we'll look for it back into the 3200s, which is the green shaded area up here at the top of the chart. So it needs to break through the orange zone before it'll go there. If it can't, we might see the retracement back to the yellow shaded area for the US CAD. Moving over to the US yen, I did suggest a sell here into the long-term trend line here, the blue trend line. We of course know that for the longest time it's been in a downtrend. So looking for the continuation of the downtrend, we're looking for resistance and a selling opportunity. Zooming in a couple of times here on the daily time frame. Look at this, Thursday, Friday, and yesterday held resistance into the orange zone. It's not until today's daily candle did we see the market break through that pink shaded area, 101.40, 101.75. So we did take a sell here because the previous 2 days and yesterday found resistance, looking for it to dip back down to the blue zone. Market had a different idea and has now broken through there. Take it down to the 4-hour time frame. And again, you can see the hesitation. Look at the resistance there into the pink shaded area, looking for the dip back down to the blue zone. Never did it and just started moving back higher above the pink zone. So stop loss hit, but it was a minimal stop loss. Hopefully you were using appropriate risk strategies. Take it over here to the AUD-USD. We've been studying the potential reversal pattern. Let me zoom it out one time. The blue box here, you can see a resistance on the left-hand side of the blue box, resistance high where the black X is. You see the resistance high in the middle, of course, where those two arrows are, and the black X, the higher high. And now we're looking for resistance on the right-hand side. Maybe a head and shoulders pattern, but definitely looking at resistance here at the blue shaded area here for the Australian dollar between 76.75 and 76.90 is the blue shaded area. So looking for resistance there and the market to dip on back down to the purple zone. Well, it did that. It did find resistance at the blue zone. The sell that I have is 76.75, mentioned yesterday on the notification from members, and if you measure it down to the purple shaded area, you're looking at 25 pips or so. So if you've been in the live trade room and you know my strategy, over 20 pips, I go to break even. If you look at the top left-hand corner of the chart, it says current stop loss in pips is 0. So my stop loss is at break even. Now we're only plus 6 pips of profit, so I'm hoping that the market will become bearish again and send it back lower pretty quickly, or we're going to get taken out of this trade at break even. But worst case scenario, we get taken out at break even. It's a wash trade, but still looking at resistance here at the blue zone for the day today here in between 76.75, 76.90. The only reason we would change that outlook is a break above 76.90. We'll look for it to go back up to the green shade area. But right now, as long as it's under the blue zone, I'm selling towards the purple zone. Break the purple zone, we're back into the pink zone, and then further reversal below the pink zone, 75.85 or so. We'll look for it all the way back down here into the low 75s for the Australian dollar. Next, moving over to the NZDUSD. This is a trade that I suggested yesterday. I'm still in it, actually, from yesterday's trade. You can see 72.80. Currently, we're a little bit negative, only 6 pips, just pretty close to the current entry point. But a couple of things to talk about. The red trend line That's important. It was in an uptrend, and it's been starting a change of that pattern where we see lower highs. The blue trend line shows us that we now have lower highs. Let's go ahead and zoom it in here a little bit on the daily time frame. Look at the black box here, the pink shaded area, the orange shaded area, the green shaded area, the black box that you see. Look at that. Blue circles shows resistance, red circles shows support. We're in between the support, the green zone, and the orange zone, the midpoint of our small range. Of course, the blue trend line shows us that we have lower highs. Descending triangle maybe between the blue trend line and the green shaded area. Descending triangle would potentially point to the breakout lower if it gets through the green shaded area. The only news today we have coming out for the U.S. trading session, by the way, is out of New Zealand, the dairy index prices. So we're definitely watching the orange shaded area here on the New Zealand dollar, and that's been our place of resistance. 1, 2, 3, 4, 5, 6, 7 days now since getting underneath that orange zone has been resistance for 7 days now. So one of two things is going to happen. It's either going to do what we want it to do and bounce off this orange zone, the blue trend line, and head back down to the green zone. That's the hope that we have, and that's what all the price action is telling us, is that we look for it to bounce off the orange zone like it has for the past 6 days, go to the green zone, and if we can ever get it break under the green zone, we look for it to go lower. There's clear risk. What's the risk here? The risk is that the market changes its mind, finally breaks through 7,300 and goes back up to the pink zone, the top of our pattern that we just discussed a few moments ago, the range that it has been in for quite a long time. If this ends up being a head and shoulders reversal pattern, we would definitely look through the break of the green shaded area and the continuation lower. The break of that pattern, of course, would be the breakout above the pink shaded area and the continuation higher. Zoom it back in here on the daily. So for the day today, I'm going to go ahead and hold through the sell that I have at 72.80, the bottom of the orange shaded area. If you got in now, you're just a couple of pips better than I am. Of course, I only have a 35 pip stop loss on the trade, so very minimal risk just above the orange zone, because I know if it gets above there, it's going to the pink zone, and I don't want to stay in it that long. So minimal risk, 35 pips a stop loss. Somewhere right around the 73.15 level is where my current stop loss is. If it gets through there, we'll hit the orange zone. If it gets through there, of course, we go higher, and I wouldn't want to stay in it at that point. So sellers, if you're looking to go short, sell the orange zone, potentially sell the pink zone if it makes it that high, target the green zone or lower. Buyers, I think, don't have any reason to buy this right now. Take a look at that orange zone. 6 days, we have found resistance. There's no reason to buy it unless one of two things happens. It either goes back down to the green zone for some reason, or it breaks back above the orange shaded area today. So all selling right now for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.